Yes, you're an idiot, okay? But that's okay because I'm an idiot. And we're all really just idiots here. But I'm going to show you that this Forex trading strategy I'm going to teach you still works anyway, even if you're a complete idiot. I can't guarantee you anything, but I'm going to show you what works for me. Let's have a look at the past 2.5 months of my personal trading history. This is a Discord group called MFX Nick's Trades where people pay to follow me YOLOing into trades. And this is the past 2.5 months. You can see the deposits, just interest payments, $4,000 in swaps and commissions, and about $38,000 profit. So, and this is the current open terminal right now as we're waiting on some trades to play out, particularly New Zealand dollar USD and USD CAD. And the weird part about this trading approach is that I almost really have to do nothing. Like literally my entries, I'm only right maybe half the time, maybe a little bit more sometimes, maybe a little bit less sometimes too on a losing streak. But the fact that I'm only half right the time means I could literally flip a coin and this trading strategy could still work. What is this trading strategy? Here's all it is. It's called dollar cost averaging. It's where you buy with a small position size in any Forex pair for any reason. Your reasoning doesn't matter. You don't even have to have a quote strategy. You could just literally flip a coin and buy or sell. And as long as the position is sized small enough, for example, 0.01 lots for every $2,000 you have in the account, whenever it goes against you, you just add wherever you think you should add. You just literally add to the losing trade. And then you just keep doing this over and over and over again. And a huge percentage of the time, I don't know the exact percentage, 95 to 99% of the time, price has a pullback and you can get out of all the trades at a net break even or a net profit most of the time. And every now and then you have one trade that continues against you, you take a huge loss or you blow the account, but that's okay because if almost every single trading opportunity works out, that means you can profit, you can double the account, then you withdraw, then you double the account again, withdraw, then you double the account again, withdraw, and boom, you hit one losing trade that just goes really, really far. You keep adding to it. It never comes back. Then you blow that account. However, the cool part about that is that whatever's in that account, that's all your risk is. So you just deposit whatever you're comfortable risking into the account, and the account functions as a stop loss. For example, if you have $10,000 to trade with and you only want to risk $1,000, you just put 1K into an account and you keep the other $9,000 in your bank account. And you could tell your friends, like, that's my trading capital. And you're just trading with $1,000. Like, this works even if you're using low leverage. For example, this is a Forex.com account. Some people, even though I've showed people like so many times this is a live account, some people still say this is a demo account. I don't really know what else to tell people. I posted publicly on my free Telegram channel with, there's like 63,000 members. I screen recorded all the terminals, all the history, all the P&L, literally everything. And for some reason, I guess people just think I'm that good. They think, no, this is so good. The trading strategy is so easy and it's so ridiculous that there's no way that that's a live account because Nick is just doing way too good with that while claiming that he's literally doing nothing. And I'm going to show you in this video, I'm literally doing nothing. So here in this Telegram channel, you can actually join this. It's the first link in the description. I've been running this Telegram channel for like 6 years. Sometimes I post little like motivational bullshit, just trying to help inspire you to maybe like, face the reality of trading and actually do the things that are necessary to get profitable. I'm not really into Lamborghinis or private jets. I don't have 10 girls that I rent to be in these videos with me, and I don't have a bunch of watches to show you. I'm just some guy who trades, and I share every single thing that I know here on my YouTube channel. So if it's your first time here, welcome. I'm just some bald dude who trades. Nothing I say is financial advice in this video. I'm literally just going off the cuff here. You'll notice most of my videos I don't even edit because I just can't be bothered to take the time to have edit. I literally have a videographer now who edits videos for me sometimes, but most of these videos are just like being direct and raw. So if you enjoy this, cool. Now let's go ahead and get into the actual trading strategy here. And I'm going to show you how ridiculous this is. We're just going to go to literally a random number generator. This is random.org. I'm going to select the number between 1 and 10. We're going to randomly pick a currency pair. So currency pair number 7. So let's go down my little list of currency pairs right here. 1, 2, 3, 4, 5, 6, 7. USD CAD. So USD CAD, we're going to go into this pair. I'm going to clear all the drawings from the chart. And we're going to go to the replay mode. And we're going to go back in time here to a random bar. The one thing I want to say about the replay mode, I know it's not realistic, okay? You should know it's not realistic. You're not going to be sitting here making decisions within a few seconds each. Usually you're going to have plenty of time to look at things, prepare them. Again, this is just to model the approach, okay? Past performance does not predict future results. Not to mention, if you're doing this in real life, you're going to be trading multiple pairs all at the same time, right? There's 24 FX majors and minors. You're not just going to be trading one pair for a year. USD CAD. So just remember that. This is just to show you the mechanics of how this works. Your job is to go out and experiment with this yourself. You can use various different position sizes. You can use risk structures. You can take trades that you think are more likely to work out and bet more on those if you want. And you can bet less amounts on trades that you think are good enough to take, but they're not necessarily the grade A trades. You can do it all yourself, and it's all up to you to do it. I literally just teach every single thing I know here for free, and I share my analysis live in my Telegram channel for free. And I've done all this for 6 years, and the only thing I charge for right now is just if people want to follow my trade. So if you just want to see me do this live, so you can maybe follow the trades, copy them if you want, use them to inform your own trading ideas, you can just subscribe to my Discord group. But that's literally all I charge for. Everything else, I'm literally going to teach it all to you for free here today, as well as all the other videos on my channel that you can go and scroll through. So here we're at a random spot. This is March of 2024, so March of this year. We're on the hourly chart. You can use any time frame on this. I myself, right now, I'm actually personally testing doing this with a 5K demo account. You'll see it's a server here in MFX Next Trades called 5K Demo Degen. And right now the account is up to 6,200. This is over the course of just over 2 weeks. It's been 2 weeks and 2 days. It's at $1,200 profit and now currently a $600 drawdown. So the time frame you do this on, I guess, doesn't really matter. However, I feel, just intuition and experience, that it seems to work better on the higher time frames. What does that mean? 1 hour, 4 hour, daily, weekly. I feel like if I use all those in Confluence, I just tend to get better trading opportunities that are easy to manage based on how you'll see I manage them. So with that context aside, let's just use the 1 hour chart. So how do we do this? Okay, well, let's first decide on what the starting balance is. Here's what we're going to do. We're going to use the lowest starting balance that I recommend doing, which is a $2,000 account. If you don't have $2,000, just trade demo. Save up $2,000. You'll get a job at Walmart or a tire shop or McDonald's or Jack in the Box or somewhere and just save up $2,000. Because if you don't even have that much, I see people trying to take a $50 account and grow it to $1,000 within 1 week. And you just keep losing money over and over. You just keep blowing dozens of accounts. It's a stupid thing to do. Don't do it. Just trade demo for a while. I have outright recommended people trade demo for 6 to 12 months minimum just to build experience with no financial risk. Because if you do that, the only thing you're really risking is your time. And then you get to the end of that, you're probably going to be a better trader after a year of just doing that instead of trying to desperately trade live with a $50 account, which is extremely stupid. Please don't hate me. I'm just being real with you. So $2,000 demo account. You start with, and then, whenever you want to go live, potentially a $2,000 live account. And we're going to use the smallest position size. You'll see this says 1K right there. 1,000 quantity is representative of a 0.01 standard lot. This is called a micro lot. This is the smallest tradable size that you can use in a regular Forex account, unless you use a cent account, which is a completely different story. For all intents and purposes, 0.01 lots for every $2,000 in the account. So if you have a $4,000 account, use 0.02. If you have a $2,000 account, use 0.01. So now what we're going to do is we're going to buy or sell. Now, I know a lot of you are probably thinking like, hey, it's in an uptrend, so it's going to go up. And then you might be doing things like you might be saying, price, it's breaking and retesting this zone. So it's a break and retest, right? So that means it's going to go up. And then some of you may have a moving average that looks something like this, and then maybe it's touching the moving average, and some of you are going to be like, oh, the moving average is touching, so it's a break and retest, it's an uptrend moving average. Here's the thing. Your reason for entering a trade really doesn't matter at all. And it certainly doesn't matter if it's you, which is like, there's a 9 out of 10 chance if you're watching this, you're not yet profitable, which is okay. That's why you're here watching me yell at you in this YouTube video. But if you're watching this, you're not profitable, so you don't have the experience or the intuition or the discretion or the price action discernment or anything else to justify your use of deciding what you think is going to happen, because you just don't know. So then you might be asking yourself, well, Nick, how the hell do I decide how to get into a trade? Well, you can do one of two things. Number one, you just pick something. You look at the chart, within a few seconds, just say, okay, yeah, I think it's going to go up or down. Then if you don't know, here's what you do. This may sound ridiculous. I get it. You're going to think I'm an idiot here, but just literally hear me out. You just flip a coin, literally. Now, why does this work? Number one, because of the risk structure. It's very low risk if you do it in the way that I'm about to show you here in the chart. Without me being able to guarantee you anything, I'm just showing you this is literally exactly what I do, and I do it live in my trading group. So with that being said, you flip a coin, and you understand that the statistics are 50-50. From the moment you enter a buy or a sell, without the context of experience and intuition, there's a 50% chance it's going to go up and a 50% chance it's going to go down. And we'll ignore the fact that, maybe it goes sideways, because price is never going to stay the exact same price forever, right? Like, it's usually going to go up or down after you enter at some point, even if it goes sideways for a little bit. So with that being the case, there's a 50% chance it'll go up, 50% chance it'll go down if you just enter randomly. And guess what? That's all you need. All you need is to be right half the time, because half the time you set a take profit, goes to your take profit, you hit that. The other half the time it goes against you, you add to the losing trade. Now you have a 50% chance of it then moving back upwards. Then you can close your first position at break even, your second position in profit. And then if it keeps going against you, will you add a third position? And again, if you're sizing small enough, you're not really going to be getting in too many what I call recovery trades. That's just you adding to losses. So you get into a buy, it goes down against you, you add a trade there. Some people will call that a DCA trade. That means dollar cost averaging. Just look it up online. It's literally just means you're just adding to a losing trade. That's literally all it means. The DCA trade, you can call it a recovery trade. You can call it a grid trade. Some people call it grid trading, but the way I do it is more dynamic than that. So I wouldn't necessarily call it grid trading. It's kind of like a combination between like DCA, recovery trading, grid trading, martingale trading, even though I don't increase the position size until we have like a bunch of positions. But you just call it whatever you want. All I'm saying is that even with the 50-50 win rate, when price finally has a bounce somewhere, you can usually, most of the time, 95 to 99% of the time, get out of an outcome at either a net break even or a net profit. And I'm going to show you right here. So again, I know before I've get into the charts here, I've taken a long time to explain the context. The problem is, I teach this a lot in my other videos as well, but I just want to be able to lay it all out here. That way it's all in one place. And I feel like this all kind of keeps coming together better and better over time. So that way there's going to be people that come watch this video. If you've heard me say this before, there'll be people that come watch this video that don't have that context. And so I want to be able to introduce that to them. Maybe that's you. And then also for the people who currently watch my channel and it just hasn't drilled into their head yet, I say it again to remind you, like it's 50-50 and this is all that matters. So here's what we're going to do. Instead of doing all this technical analysis and fundamental assessment and everything, we are effectively going to flip a coin. So 1 is buy, 2 is sell. So this is 1. So we're going to buy. We're going to go here to the chart and I'm just going to hit buy. Now here's what I'm going to do if it goes against me. If it goes against me, I'm going to buy at the next spot I think it might reverse at, which is, let's just say right there. Now, you can buy wherever the hell you want, okay? It does not matter. I don't want you to obsess over thinking, well, do I buy every 5 pips if it goes against me? Or is it every 100 pips? Or do I buy at support resistance? Or do I wait for it to go to the 200 moving average and then wait for the 100 moving? It doesn't matter. Just wait for it to go against you. At the next area that you think price might be likely to reverse, just add a trade there. Okay, it's not that big of a deal. You don't have to have all this fancy reasoning, especially if you're trading on a demo account and you have no real evidence that suggests you're profitable. You're just, right now what you're doing is you're just throwing darts at a dartboard and you're seeing what happens to hit near the bullseye. That's called learning through experience. Then once you get profitable in demo, you can move to live trading. And then you won't even have to worry about anything because you'll be like, yeah, I've been profitable for a while. I think I'll continue to be profitable. I'll use a small live account and you'll just keep going. So prices up here, if it comes deeper into this zone, I'll buy. And if it comes down here, I'll buy again. And for take profits, let's just set a take profit up here. What does this mean? It just means the price has been doing this little up and down uptrend thing. If it goes up from here, maybe it'll make a new high. There's the profit target for 7 Canadian dollars. Okay, so price goes here to this next zone. It misses that. We're going to add. And then if it goes even further, we're going to add again. So we're going to add right there again, just as we plan. Where's the next zone to add at? I'm going to look over here. I'm going to say right there. We're going to add if it comes deeper into that area. Okay, so I missed the ability to be able to add down there, but that's okay. It's pushed back up. What I'm going to do is, since we've gotten into one trade with 2 recovery trades, so 3 trades total, I'm going to adjust the profit target into this zone up here. Okay, so that hits the profit target. So now what I would want to do is sell, but we're just going to act like we don't even know what the hell we're doing. And we're going to go to the random number generator again, and we're going to generate, and it says number 2. So thankfully the random number generator knows what's going to happen. It told us to sell, we're going to sell. There's a running joke here on my channel that the random number generator trades better than 90% of traders. It's extremely funny the way that works. So I've set the take profit where I've just set it at the next area that I think it might bounce, the next support zone. You don't want to set profit targets too close, right? So you don't want it to be like 2 pips away from your entry, but you don't want to try to be a hero and target like 5,000 pips from your entry either, right? You want it to be somewhere where you think, okay, within the next, very soon to come time period, I think that price is likely to have a movement to that location if it moves. So not too far, not too close. How do you know what it is? I just look at the chart. I don't know. It's probably not going to be 5 or 10 pips of a take profit, but you're probably not going to want to hold a trade for like 2,000 pips of profit either. There's no pip amount. Just visually look at the chart. Don't screw what the pips are. It doesn't matter how many pips it is. Just look at the chart. Say, yeah, if I think it'll go from here to here, then I'll take the profit right there. So we're in this trade. We're going to see what happens. So it goes up here to the resistance zone again. We're going to sell again. I'm going to keep the same profit target. The next zone to add a trade will be up here. All right, perfect. So we add a trade up there. I'm going to also adjust the profit target. I'm going to pull a little bit closer. We're going to manage this based on the context. So it goes down. It goes into profit. Yeah, I mean, I guess this will hit the profit target. Okay, sweet. So that is the profit target. So that was a profitable trade. This was one sell. You can see I accidentally entered 2, so I immediately closed one. If you rewind the video, I just closed one. And so one sell, I added a second and then a third. And you'll see that oftentimes the best thing that you can do is to just add to a losing trade. Now, what I'm hoping we're going to get into is we're going to get into something very hairy. We're going to get into like 5, 6, 7, 8, 9, 10 recovery trades. It's going to be like a hairy tarantula crawling on your face in the middle of the night. I'm not sorry for putting that mental imagery in your head. You need to imagine that if you want to become a profitable trader, because you have to understand the reality of trading DCA. Is that sometimes you're going to be in big drawdowns, and that's okay. It's not that big of a deal if you've sized appropriately. For example, this is the biggest drawdown that I've had in like 2.5 months, right? It's 10% of the account roughly. And in closed P&L for this same time period, I've closed like roughly double the amount of the current drawdown, right? Not quite, but almost, like roughly almost double that. And then if these come back just to even be break even, right? I'm still going to be up like after fees and stuff like $36,000 over the past 2 months. Right? This is like mindless looking at a chart with no technical analysis saying, I think it's going to go up or down, and then just using the same position sizing. If you'll notice, I practice what I preach, in general. Sometimes I do things differently just because my intuition and experience and all the nuance and subtleties creeps in, and then I have to make a discretionary decision. But in general, you look at my position sizing. These are 5 new trades I called this week. I'm using 1 standard lot to enter those trades. The account has $200,000 in it. This is equivalent to you using a 0.01 lot for every $2,000. And I'm using a 1.0 lot for every $200,000 in general. Sometimes I'll increase the position sizing, especially if I start getting into a lot of DCA trades. But to start positions off, that's always the way to do it. It prevents you from blowing the account. Most of the time, not financial advice, cannot guarantee you anything. Trading is risky. Most people lose money. You shouldn't be doing this at all. But if you're crazy enough to keep learning, then keep on following me here. We're going to do a few more magic tricks here on the chart. So price goes up. I think it's going to bounce here at this resistance zone. But let's see what the random number generator says. Okay, number 1. All hail the random number generator. We're going to buy. 1 equals buy. So we will buy up here at resistance. And the random number generator is right again. So what I would normally do is put a TP at this zone right here. But since it's up there and I didn't put the TP, I'm just going to close right here. Now, you may notice your reasoning behind a trade is very, very foolish and silly. I thought it was going to bounce at that resistance zone, but literally it's only 50-50, right? Especially if you don't have experience. It's just 50-50. I was wrong. It just went straight up and it hit the profit target. This literally proves you can enter randomly and in most cases come out of most trades either in profit or break even. You have to get more experience doing this, obviously, because I cannot guarantee you anything at all. I'm just showing you the concept, just putting it into practice here. All right, let's do like 2 more trades, right? Let's do 2 more trades. Let's see what happens. I want to sell right here, but we're gonna see what the random number generator says. Random number generator says buy. So we're gonna buy, and I'm just added all these different zones down here as if price goes against me. Okay, sweet. So it goes down here. We're going to buy again at that zone. Where should we take profits? If we just want to be safe, we can take profits at the peak of this resistance zone, just to be safe. I think it'll make a higher high if it goes up there, but you never know. So we'll just set the TP there. Price goes deeper into support. We've already added there, so I'm just going to leave it. Price goes down again. Let's see if it can get to like maybe in here around these lows, and then I'll add again. Nope. Price instead just decided to just spike back up obnoxiously, very, very sassily, and hit the profit target. Unfortunately, we have another winning trade, and I know that sounds ridiculous. I know you're probably gonna go into the comment section and say, "LOL." Unfortunately, another winning trade. But this just goes to show, like, you legit don't know what's gonna happen. Even if you've been trading for a while and you have a 60% win rate, 40% of the time you're gonna be losing. If you have a 1-to-1 risk reward ratio and you're using fixed stops, that's a profitable strategy in and of its own. 60% win rate with a 1-to-1 risk reward ratio. But with this, you can win almost every outcome. You just have to size small enough. So we're going to do the last trade here, which is number 1. So we're going to buy. I'm going to set the profit target of a higher high. And it goes up and hits the higher high. Now what I'm going to do, now that we've done $46 in profit, and what I'm going to do now is I'm going to take another 3 set of trades, and I'm not going to say anything. I'm just going to do it. I'm going to make all the decisions, do it real quick to show you how you could backtest this on your own. Ready? And we're going to close random.org. I'm going to try to use some experience here. Oh, that's the last trade. Okay, already done. So now we went from like 46, 50 bucks to like $67. That right there, what you're literally all you're seeing me doing. What was I doing? I was just in the moment making a split-second decision without even pausing the damn like terminal thing, the backtesting replay thing, without even pausing it. Just like, nah, I think it'll go up. Nah, I think it'll go down. And just literally buying and selling with a 0.01 lot and just letting it play out. Now, again, if you have more trading capital, that's great. You should pat yourself on the back, right? If you got like 10K to trade with and you want to use a 0.05 lot size, you be my guest. That is your decision. That was your decision, not mine. Like, you do whatever you want. You need to make sure it reflects your risk tolerance. But literally, what I've just shown you is that it doesn't really matter what you do if the positions are sized small enough. Again, if you're doing this on like the monthly chart, maybe not the best idea. If you're doing this on the 1-minute chart, there's an argument to be made that it works, but I don't think it's the best idea, because then you got to use higher position sizing to actually make a significant amount of money. Otherwise, your wins are going to be like 50 cents to $2 or $3 or $5 or something. And then on top of that, you've got like spreads. So like just the spread alone, sometimes on some pips, like with Forex.com that I'm using, it's like 2 to 3 pips sometimes. If you're doing that on a lower time frame, you're catching 3 pips of profit, but your spread is 3 pips. Congratulations, my friend. You are break even. You're a break even trader. But it still works. So let's look at how much time this took to do. Okay, so we've got March 1st over here to May 2nd. So March, April, May. So this was 2 months of data. 2 months of data, and then $67. What I want you to do is, here's what we'll do. Instead of $67, let's round that down and say we only made $50. Okay, so only $50. Then let's say that we were trading 10 different currency pairs. And from each of those currency pairs, we got $50 from each of them. $50 times 10 different currency pairs over the course of 2 months is $500. Now, if you were trading 20 currency pairs, which is almost all FX majors and minors, that would have been $1,000 profit. And if you were trading all 24 pairs, maybe, you got 50 bucks from each pair over the course of 2 months, which is a huge assumption, but still, I'm just trying to be as reasonable as I can, very conservative. That would be like a little over $1,000 profit in 2 months. Let's say you keep doing this over the course of another 2 months, right? You saw what the drawdowns were. The drawdowns were not anything crazy. At some points it was in like 10, 20, $30 drawdown, but every single outcome came back and resulted in either a net break even or a net profit. Most of them were a net profit. If you scroll back, you can rewatch it and pause it all and inspect it yourself. All I'm saying, go out and try this. If you did this for 2 months and you grew a $2,000 account to $3,000, that's a 50% growth. Now imagine if those same rough general statistics, and again, I'm rounding down, right? I rounded down from 67 to 50. If those same statistics are true, then let's say it takes you 4 months to double an account. And let's say you have 3 accounts over the course of a year. You double the first one, you double the second one, and then you blow the last one. Well, you still come out and profit 1 unit of risk because you have $2,000 profit, $2,000 profit minus $2,000 loss. So essentially cancels out the last 2 accounts. You're still profitable. And again, you're profitable without even having a trading strategy. You're profitable without having to do all this wild, maniacal, smart money, liquidity, institutional order block, bank manipulation, stop hunt, Wagyu beef, bullish, institutional spike, entry, candlestick trading strategy. You're not having to do any of that. No moving averages, no Fibonacci, no fundamental analysis, no calling your mom crying that you're a failed trader sitting in the corner of a dark room, naked, eating cold pizza, begging her for some rent money. You don't have to do any of that. All you have to do is structure the risk like I've shown you here in this video and go out and test it. And then not only this, you don't even have to do 1 account at a time, okay? Let's say you have 10K to trade with. You can start 5 different accounts with $2,000 each. And you can just take different trading opportunities on different accounts. So maybe on one account, you're in like a Euro CAD short, a Euro USD buy, and then a CAD CHF sell. And then on the other account, you're in like a GBP JPY buy, a Euro JPY buy, and then like an AUD CAD sell or something, right? You just use different currencies on each account. 1 or 2 of them is probably going to blow, but more than 50% of them, again, I'm just saying this from experience. I'm not saying this as a fact. I'm just saying from experience, in my opinion, and I've shown this over and over and over, the likelihood of growing an account to a growth target of 2x, meaning just doubling it, is statistically higher as compared to blowing the account if you're using this risk structure. Now, again, I can't get inside your mind and force you to do the exact same things I would do, but that's why you should subscribe to my Discord server, because I just taught you everything for free. So you can go out and do this on your own, and then you can join my free Telegram channel. It's the first link in the description. You can just watch me send the analysis out live, or you could just give up and just join my Discord server. You could just watch me trade live. Literally every single thing that I do is in there. There's no reason for you really not to do it. I mean, like, I teach everything for free, and I have the Telegram channel that I've been running for all these years, sending out all this analysis. I sent this out yesterday. This is what it looks like. I just send out all these charts and stuff, and so I think it's going to happen. I keep it real simple. And then you can join the next trade server where I just share all the trades I take. For example, these are the ones I called yesterday. This is what I actually do. I just show my trading terminal. I put a screenshot showing, hey, I've entered a sell. There's the take profit, and I show how much the P&L is. And then after I do that, I show my actual trading terminal so that you can see the balance, the equity, the margin that's used up, the free margin, literally everything. You just follow it live. So if you don't believe that it works, you can follow it live and you'll be forced to have to make profits long term. Can't guarantee you anything. Anything could happen, right? You could join. I could go on a losing streak for 5 years and just continue losing money. And that would be very unfortunate. It'd be very, very, very bad. But you can join it. You can just see it all live. This might help you fast track your path to success. So consider joining the Next Trades group if you want to see it. You can go model this in backtesting demo. You can start a small live demo account. You can start a small demo account first for 6 to 12 months. Please just don't wreck yourself. Then maybe a live account after that if you want. You can follow my Telegram. So you can put this all together. You're going to see very quickly like, oh, there's actually something here. It actually works. Like, holy crap. And then if you want to follow my trades live and kind of see how I structure things, because there's nuance and subtleties, then you can join the Next Trades group. You just follow my trades, and then it also will help you learn through some experience. So consider that if you'd like to, if you'd like to give back to the local community, give back to this bald guy who yelled at you in this video. If you liked this video, you just do whatever the hell you want. I'm not going to ask you to subscribe or like the video. You just do whatever the hell you want. I'm going to see you in the next video. I'm going to go out and finish my trading day today. So I hope you have a good rest of the day. Cheers, my friend.